Dub Investing is one of the most exclusive, profitable trading teams you can be a part of. Constantly analyzing, looking for entry points using algorithms only some know. Get in on the action, secure your profits today. Do you want to make a financial change in your life? Join the winning team. Dub Investing. Dub Investing is one of the most exclusive.
Mics are on. All right. What's up, y'all?
Is the commercial done already?
Yeah, I played it a minute ago.
God
We
damn,
can make a
that was
longer
quick
one.
as shit.
We can make a
No,
longer
I
one.
mean, yeah, we will next time for sure. My God, that was just quick as shit. I didn't expect that.
You're like, that's it? That's all? That's the
That's
whole
all we got.
commercial?
Come on. All right. What up, everybody? How y'all doing? Oh man, dude. It has been a long week, buddy. Long week.
Oh, definitely.
Definitely a long week. Fucking market has been green all the way up until today. It was pretty damn flat. But it finished strong.
Yeah, it did. Oh, yeah, it finished really strong today. S&P did.
Absolutely. But what do we got today for 'em? We got the supply chain disruptions, and then we'll go further with the impacts on that has on the market and its further outlook and what it does. And Will, you want to start us off with that?
Yeah, so some numbers I was looking at today was, first off, well, let me get the screen on for that. Okay.
Dub.
Well, first I wanted to look at President Trump's briefing today, because he talked at the joint of Congress, so I kind of wanted to look at what he said. Worst pandemic in the century, worst economic crisis since the Great Depression, worst attack on our democracy since the Civil War. Now, after just 100 days, I can report America is on the move again, turning peril into possibility, crisis and opportunity, setbacks into strength. I promised to get 100 million COVID vaccines. Talks about the vaccine a lot. Yeah, autoimmune disease. Talking about the vaccine. Talking about same 100 days. Sending rescue checks to 85, 1 million checks, 160 million checks out the door. It's making a difference. Oh, it's making a difference, all right. These checks are making an unprecedented difference right now. These checks are actually destroying the economy due to the inflation it's creating and due to the multiplying that it does. And the thing I think that makes this one different is a lot of the multiplying was in the market.
Are you talking about the multiplier?
Yeah. So a lot of the money that was injected into the market was spent. It was mostly given to investors. Well, people that invested into the stock market.
Right.
So this made the stock market inflate so much that all these people got all this money, and now they're all quitting their jobs, which was the complete opposite that we wanted it to do. Change that around. Yeah, that was the complete opposite that they wanted it to do. They wanted to give the businesses money so they could hire more people. Well, the businesses hired a whole bunch of people, paid them a whole bunch of money, spent a whole bunch of money elsewhere, and now they're all fighting over people. because everyone is so rich and America has so much money that there's not enough trucks right now to import the goods, because the people right now in America are quitting their jobs, which is making our output extremely low. And since our output's extremely low, I'll show you the numbers right here. That's the trade. Yeah, October 5th. So as of October 5th, our trade deficit is 73 billion. Our exports are 213.7 billion and our imports are 287 billion. That means Americans are buying a lot of foreign goods right now, and there's so many foreign goods, in fact, that we're not able to actually truck it efficiently to the stores. And since the truckers got so rich, the truckers quit their jobs. So you see how injecting this money is having external outcomes in the market, because since we got all this money and all these people got so rich, well, now we don't have to work anymore. But wait a moment, these businesses still have to keep running and people still have to keep buying stuff, and eventually everyone knows we end up running out of money to keep doing that. I mean, you can't just keep buying everything and sitting at home and getting checks from the government, because this money is not real. This money is fake. And this money is also in a lot of bubbles right now. So a lot of these people that are rich in the stock market have not sold their shares. So they're not actually rich yet in the stock market. Like the long-term people, we're at unprecedented levels in the market, which means that once this falls, we may not get to those numbers. Hold up, let me reset my epoch, because my epoch is freaking out after I got a call. What was I saying?
We may never see these levels, and then you pause.
Yeah. We may never see these levels of the market ever again. Talking for a long-term trader standpoint. And so right now everyone's rich. Everyone's rich. You know, I'm not talking for a day trader. You're not like, oh my God, my money has gone up so much. Well, of course it has over time. But these long-term traders have been there for a long time. And now they're ready to cash out. They're like, oh, I was worth 130,000 at the start of this year, and now I'm worth 650,000. I'm quitting my job. Well, these businesses still have to run, and some of these businesses are in such like a peril right now that they're not even able to run because there's not enough people. There's just actually not enough people right now. Like, you go to IHOP and you sit down, and they're gonna say you got to get up and leave because there's not enough people to serve you. And when that happens, that means that businesses are going to shut down. And once that starts happening, then the multiplier effect stops happening as well, because people have less places to spend their money. And when they come back to actually needing to go back to making money, because 650,000 is not going to last them the rest of their lifetime, such as 1 million is not even enough to last a 6-year-old till the rest of their life. You know, once you're 60 years old, if you have like $800,000, you may not even be able to last for the rest of your life comfortably. I mean, you need like 1.9 million, and then you're comfortable, at least, by the time that you're 6 years old and retirement. And I mean, it's easier said than done, because you have to start really young, and a lot of people don't. So, it's something for the long-term traders. Now, some of these other numbers I have right here. This is some more on the trade deficit. You see, the trade deficit's getting worse right now.
At a rapid rate or a steady?
I'd say exponential rate. Or not an exponential, probably a logarithmic rate. Look at it on the podcast. But it's definitely going up. steady rise
Yeah, buddy.
of the trade deficit. Then you
Not
see
good.
some of these numbers. So I'll show you some of these numbers from the census, the United States Census Bureau. We see exports, January 2021. You know, this is really pandemic time. So, you know, we got 12,000. That's pretty low. You know, imports 39,000. That's a lot. You know, 26. But you also got to look at these other years. These other years, we also had some serious trade deficits.
No, explain what the trade deficit does.
Well, the trade deficit just decreases our GDP. Because GDP is calculated through consumer expenditures, business investment, government expenditures, exports minus imports. This is net exports. So net exports is net negative exports. So every single time that we export more stuff in, it's a negative on our GDP.
Oh, you know who's about to pass us, buddy?
Hmm.
Actually, I think they might have already done it.
Hmm.
China.
Nah, and that's a misconception too. A lot of people think that China is gonna beat us in GDP. They I don't believe that they're gonna let me check it real quick.
They were getting close.
Nah, I don't think they're anywhere close to us.
But
we're in a lot more debt than them. Yeah, they're only at 15 trillion. We're at 22 trillion. They're not catching up. But sorry, China, but you're not catching up. And and their population is like ridiculous, 1.4 billion people, and they're all aging out of work right now.
Out of work. What is going on with that Evergrande situation? Have you heard anything more about that?
Evergrande is a whole fugazi right now. You know, I'm pretty sure the Chinese government just took care of that problem. Today I just read up on it. They defaulted, or they abandoned one of their projects, selling it to someone else. And a couple weeks ago, they defaulted on a loan, and that loan is gonna come up, I think, this month. That may have been the loan, but if it wasn't, then they have a loan that's coming up in a couple weeks that if they don't pay, that will finally count as their default, which will cause, well, and also right now, China is threatening to sell bonds, which is really bad for the U.S. bonds, which is really bad for the United States, because that is technically them saying, give me my money back a little bit. Like, in a way, but not in a way, you know, saying like, yeah, you know what? We're in a terrible situation. We're selling these U.S. bonds. Here you go. And now our bonds are going to fucking tank, which would raise the interest rate, which would crash the stock market. But, I mean,
oh my God.
That's exponential thinking, though. That's crazy. I don't think that will actually happen. I think Evergrande is going to run into the fugazi of China, and China's going to just take care of it, or take it on as like a state-run company or something.
Oh man, I really hope so, buddy. That would not be good if they decided to come for that money.
Oh yeah, well, I mean, they don't necessarily come for the money, because the money's not just like,
well, not like literally, but come for the money. They want money.
Well, yeah. So what they'll do is so if the people watching the stream are unknowledgeable about bonds, there are old bonds and there are new bonds. If China goes and sells all of their old bonds on our market, that is going to tank the value of new bonds, because there's a whole bunch of old bonds on the market now. So depending on how much China dumps on the market, depends on how much China is going to say, all right, America, someone's gonna have to buy these bonds from us, and it's probably gonna be you.
No, I mean, there ain't no probably, boy. It's gonna have to be you, and it's gonna have to be you, buddy. Like that'll be it.
No,
We're
no.
all
Because
gonna
the
be
thing
slaves
about
to
bonds,
China.
the way bonds work. Well, the way bonds work
I
is
mean,
that,
who else wants that expensive ass bond like that though?
well,
Russia, maybe.
no, Russia doesn't have the money for that. Let's look at Russia's.
Right. Who else has the money for that
Let's
shit?
look at
To be
Russia's.
honest.
Let's look at Russia's GDP, bro. Russia is number too many to count down, and
Number too many to count down.
national debt is
Whoa.
300. 300.
Damn, boy, these debt charts are climbing. Shit would make me sick if I was looking at that all day.
Well, the thing about the national debt is it's fine because it just has to be balanced to your GDP. Like, look at these people's public GDP. Like, look at this, 251%. That's over leveraged. America is at 98%. They used to say 70% was over leveraged, but since then they said that doesn't matter anymore. Yeah. Yeah, but so I mean, really, it just gets down to the point of that people are not going to be able to go to work, and since they're not going to be able to go to work, the companies are not going to be able to produce enough, which means that America's going to have to import more, which will just keep raising our trade deficit.
Wonderful. Sounds wonderful, buddy.
Wonderful.
All right.
Yes, sir.
Back to the outlook on the outlook moving forward in the market. What do you see the overall direction in the market being, knowing all these things worldwide and nationwide, and knowing that November is naturally a bearish month in the market? What do you think?
I mean, there's a lot of geopolitical tension starting right now. I'm not gonna lie, so that could definitely influence the market. But right now, market sentiment is like 60% on the yes side, so it still is a go ahead. But like people do feel like now that Jerome Powell has been blowing off everything for so long that it's almost going too long, that rumors already started, which means that the news would probably be the sell off. But I'm not gonna say anything like that. I'm not gonna say anything like that quite yet. But
Well, I think the spy charts will make you second guess that, make you want to say that.
second guess it.
Yeah, you want to
Where
see
you
the
think
spy
s-
charts real quick?
Where's Spy going?
Let me show you, boy. Let me show you. Share my screen real quick.
Hold up, bro. All right.
Good.
Mm-hmm.
All right, my guy. So you see this highlighted region right here?
Mm-hmm.
Okay, so this was the first gap that was formed in October when we first started this falling wedge. We fell out of the channel that we were in, the bullish channel.
Mm-hmm.
We came down, we filled it down, and then on the way down, we gapped again, and we have yet to come back. And it's gone all the way. Well, this first gap filled in the beginning of or formed in the beginning of October, filled in the middle. The second one was formed in the middle, and now we're at the end. And November is naturally a bearish month,
So
so
you're
I'm
saying you're
thinking,
thinking this market's coming down.
yeah, what I'm thinking
Well,
is,
well, I'm not saying that the market's not gonna come down. Don't get it twisted. I'm not saying that the market's not gonna come down, but I'm just saying that something has to happen to make the market come down. Like this market
of
is acting
course,
ridiculous. Here, get up the DXY for me real quick, boy.
DXY. Here you go.
DXY, yeah, there you go. I mean, dude, the DXY is just doing fine. It's doing quite fine right now.
I don't know how.
It's doing fine. It's doing ridiculously fine. Too fine.
Yeah, too fine, buddy.
But
It has no
what's up,
reason to
Sing?
be doing all this.
You guys
Get it
Sing?
on the 1 hour time frame.
Yeah, the 1 hour time frame. I mean, dude.
I think I got a nice falling wedge right here, boy. Maybe this is a channel. I don't know yet. Let me see. No, it's definitely a wedge. God damn, this fucking screen's graphic sucks dick. I'm gonna have to get a new one for sure.
Gotta change your screen.
Well, I have this TV monitor set up to my trading
no,
laptop.
no,
That's
boy,
why.
you're terrible. You're crazy. Tweaking.
Get the fuck out of here, boy. I don't even want to hear from you,
You
bro.
need to get the
I
hell
don't
out
even
of
want
here
to
with the
fucking hear from you,
TV.
fucking geek. Shut the fuck up. You stupid bitch. Huh.
Yeah, I mean, it's still gonna break out. I mean, it's manipulated by the Fed.
I mean, yeah, I think he's gonna break out right up in here.
Jerome Powell is about to talk.
November, yeah.
So you already know. That shit's gonna
You
start
already
hitting
know.
It's going to 94, I guarantee you. I don't know. Crypto's doing good though. Bitcoin's running. Bitcoin's on a real run.
I can't even talk about crypto, bro. I suck ass at crypto, bro. I need a fucking crypto analysis in this goddamn podcast today, tomorrow, soon, bro. I need to talk to somebody. I need to talk to Hex. I need to talk to Hex. I need to talk to Solo, bro. Because this is not gonna work. We got too many people wanting to know about crypto. I don't know a damn thing.
Yeah, UVXY is about to run in November, definitely. Doesn't Jacob Sandman have calls there? Long calls?
Shit, goddamn cold chill. All right, buddy, you ready to move on to topic number 2, though?
Yeah.
All right, topic number 2 is the mixed wash news in the with the economic outlook in the media, and what your final analysis is on it as an economist.
Well, so I'm seeing CNBC, and I actually saw like a meme the other day about how how CNBC had a news not LL just shares. Hey, I mean that's something. Are you getting in UVXY, Troy? We're gonna have calls in UVXY.
What is it?
UVXY.
I don't even know what the fuck that is, boss.
Dude, you gotta watch the chat. Sing's talking to us.
Oh, I have the thing full screened.
Yeah.
What is UVXY? Is it a volatility thing?
Yeah. Yeah, I'm pretty sure.
Yeah, you know, I'll be there. I'll see that. I'll see it. I'll see it through. See if I can do a little something with it. But I don't know nothing about all that, so I'll have to look into it. Take a look at the chart. How did I know you were gonna ask me, buddy? UVXY. Oh my god, it's a short-term volatility measure. Fat falling wedge. Not a falling wedge. It's just trading sideways like a motherfucker in a channel.
Yeah, shit's falling hard, bro.
Oh, Sing, my boy, there you go. That's the 1 hour. I don't know what you want me to see here, buddy. This is a whole lot of bear shit. I mean,
Dude, yeah, the technicals say sell.
I mean, literally. Technicals say do not buy this ever with anything you have.
And any time frame on any day in any year, bro.
Yeah, bro.
Actually,
even know.
it runs though. It ran in September of 21.
Where did they find this stock, bro? It could be a falling wedge. I don't even fucking know. That is really, really tight if it is. Let me see something. No, it doesn't work. Potentially. I don't know, buddy. Either got one tight ass falling wedge, which is a reversal pattern, or just a very bearish channel that it does not look to be breaking out of anytime soon.
He said every
But,
time the market's down, it runs. So I mean, the market is up, so it is down. It is down, and the market is up like big right now. So when the market crashes, we got to be there.
I get enough on my fucking shape. I'm sick right now. Right there.
Yeah, I'm gonna try to get your trading shit bigger.
Right here, you have a bearish rectangle, which is like a bearish, just like price range that it cannot break, which just is like a continuation thing, and that's when it entered that. So I mean, I have no idea why you were buying this.
Interesting.
I'm trying to figure it out, bro. I'm trying to make it make sense.
Well, when the market was down, it was up, I'm pretty sure, back in September. It was up big in September. Market was down. It was up. Market uncertainty. It was up.
What the fuck?
Market.
Apparently, I started this at one point. What the fuck? Okay.
Dude, you should get dual screens up, bro.
No, I don't want dual screen.
Oh, fuck yeah, you can't do dual screen because you gotta fucking pay for it. Dude, Trading View is so bad for that shit. Make you pay for it.
No, I like Trading View, boy.
I love Trading View, dude. But they don't let you do like any like actual good technical. They don't actually get let you have like double chart up, so you can compare. Because you should be comparing.
I have no idea.
You should be comparing the S&P 500 to this. Because the S&P 500 should be running.
I mean, you can.
Let me try to get. Let me try to do it for him.
The S&P 500 is running. Look at it.
I know it is. So, but it should be running every single time this is up. That's what I'm saying. And it should be like down to a T.
No, it should be down every time this is up.
Yeah, it should be down every time. So it is.
Yeah, that's fine. You can play this when the market is down. I'm just saying right now, I'm not buying it.
Yeah, not right now.
I'm not buying this because I'm just going to, one, keep averaging down, and two, keep guessing when the market's going to crash, when I can just hear what the Fed has to say, and then after the Fed says whatever they have to say, I can determine whether the market's going to crash and then look at this shit. But I'm not throwing my money in this right now.
Not right now. No way.
No way, Jose. All right, my guy. But the mixed news and the market outlook for your final analysis.
Yeah, so the mixed news. I mean, the mixed news, it could have a good effect and a bad effect. I mean, the mixed news keeps the market, and keeps different people. Yeah, I just wanted to put it out there so y'all know. Yeah, thank you, Sing. The mixed news can be good for the market and can be bad. The mixed news can give the people what they want to hear, but the mixed news can also create FUD and make them uncertain about their trades. You know what I'm saying? Because like if you see like on like just Webull, right? Like you can just see like all the different tickers going along, like, oh, the economy is going to be terrible this month. Oh, the economy is going to be great this month. Oh, the economy is going to be terrible this month. Oh, the economy is going to be great this month. Oh, like, and they're all and like the same like the same people are making the claims.
So what do you think?
I mean, dude, it's gonna make investors uncertain. That's for sure, and that's dangerous. It's always dangerous.
So investor uncertainty and negative turmoil in the markets.
Yeah, I mean, we're still in the supply shock right now, or whatever we're in. I don't know what the hell's going on with supply. I mean, I just told you what I think is happening with supply, but no one actually really knows exactly all the factors that are going into the reason that supply is not being made right now. Like, it should be able to, like, we should be able to produce enough stuff for everyone to have. Like, if we can't, that's a failed nation. That's like China. China can't produce everything that they need. Like right now, China's having like the oil shortage you've heard about. Oh yeah, also the China power shortage is also going to cause some issues this winter because they're running out of coal.
Jesus Christ.
And they're going to run out of electricity. Because that's how it works, you know? Like, if you don't make enough coal, then you can't have electricity anymore.
Yeah, boy.
Someone's
got to make enough to keep the lights on.
Yeah, someone's getting fired.
Huh. So is it safe to say the overall analysis is just market uncertainty is to be ahead?
Just be on the lookout. I mean, I'm not saying that the market's going to crash or anything, so just keep following the alerts, and you should be perfectly fine. As long as you're in the Discord and you're following our alerts, no, you should have zero problems in the market.
Hell's good, buddy. All right, time for the stocks. Thank God. My turn, buddy. My
Yes, sir.
turn. The top 3 stocks for Friday, with number 1 being fuel cell. Yep, fuel cell. And this falling wedge right here. Bangity, 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 boy. Bouncing off the trend line. Perfect for like what, the third time? 1, 2, 3. Yep, 3 times. Bounced off the trend line here. That means it's a solid ass trend. Calls tomorrow will print for a nice quick scalp for a day trade. And then on the daily, we're looking for a continuation above a CMA 9, and that's pretty much it. We just want the CMA 9 to continue to come up, so we need a nice bounce. This will drag the CMA 9 up. The closer it gets to these candles, the closer we can, and we'll stay above this first resistance, making it a much stronger support, and then we can also touch the CMA 9 for a much larger move in the coming future. And then for number 2, we have Neo. Where the hell is Neo right there? Oh wait, I already have Neo up. Banging, boy. Got a nice major bull flag. Well, there's two possible trends going on here. First, we have a uh, a wedge right here. We have a wedge, and then we have a bull flag. The more likely possibility is the bull flag, just because this is a rising wedge, which is a bearish pattern. This is a bullish pattern, which is the bear or the bull flag. More than likely, we're in a bull flag just because this massive jump in the very strong bullish buys, the buying power that was coming in, the volume intake, and the buyers that are still going to be here. More than likely, it's going to follow this bull flag and continue to be a bullish pattern on the overall outlook of everything. On the 1 hour and 15 time frame, however, you have a falling wedge, which is a bullish reversal pattern. So whether we reverse tomorrow or we come down and we touch this trend line right here, either way, this is a bullish reversal pattern, and it seems to want to end right here at this trend line, which is why I say I think we stay within the bull flag and the bullish trend line, and then we come up and potentially break out for higher highs in the near possible future. And then charge point for number 3, we've got another bull flag on the hourly time frame and the 15-minute time frame, looking to surpass this first resistance at like 22.25, 22.23. Once we've done that, it'll be resistance 4, 23.27. This would be like almost all the resistance broken in the week, which is like extremely bullish. You can see the overall trend has pretty much been the same thing every day. It's always a bull flag swing, bull flag swing, bull flag swing, and we've been in this since before the breakout down here. So we're gonna keep riding this up and letting it swing out for us and make us money. But calls in this, I'm looking, or if you haven't already, or well, I actually only have one contract left in this. We've already exited the majority of our position, but if you want to add or can add more calls to your position or establish a new position for like November 5th or 9th, do so, because this will definitely print tomorrow morning. Will, do you have anything to add about that?
Yeah, I mean, Charge Point has always been a big runner for us. Neo also, Singh was in there for Neo. He said, we love Neo. Yeah, we do love Neo. We played Neo like a fucking banjo last year,
Nice, dude. Oh no,
bro.
yeah, we played Neo like a fucking banjo, boy. We played that shit so much. That was kind of ridiculous how many times we played Neo and how accurate we were on it every
Yeah,
time. That was
every
insane.
single time.
What do we call? We call Neo what, $7 to $13 to
Nah,
20 something,
yeah,
20 something.
it was $8.35 to $12. Then we called it from $12 to 18, then 18 down to 16. Then we rode it from 16 all the way to 30. Then we got it. Then we sold it at like 30. Got back at like 16, and ran it all the way up to like 45. Sat in the 45 to like 55 region. Played 45 to 55 range for a while on Neo, and then ran all the way up to 65. Told everyone to get out. No one wanted to get out, and walked away.
We got paid. That's all that matters, my boy.
Yes, sir. Yes, sir.
Yes, sir. But I think that's. Oh no, we have the market direction for tomorrow as well. I think we basically already pretty much covered that, but I'll go over it one more time. Just
Pretty much.
we were already talking about it earlier. I'll go over it one more time though. I posted it in the watch list. We closed the day above the EMA 9, which is really bullish after having this massive finish in today's ending after touching this top of the trend line right here in the current channel that we're in, bullish channel that we're in, which by the way, which is what we were in before all this. Where the hell is it? Before all this right here is a bullish channel. So we've just entered a much smaller bullish channel on the daily time frame, which is still a continuation pattern upward. Right, or tomorrow, because we closed above the EMA 9, I'm looking to retest the top of the 10 or the trend line of like 454, 453, 90ish is where that'll be. That's where I think we'll find our final double top on the market and have that double top that I was talking about earlier, and then enter our next week being the entrance to the bearish market going into November. I think that is what we're going to start to see starting next week. But tomorrow,
Rolling out the puts.
yeah, boy, start rolling out the put.
Playing
And
spy puts. Playing spy puts with Cody.
I mean, we definitely could towards the end of or towards the end of this, or tomorrow, towards the end of tomorrow afternoon, and then Monday morning. Could definitely see what the market's doing and start playing some spy puts.
Yeah, man, spy puts always get me going.
Yeah, boy, they definitely get your adrenaline pumping. I'll tell you that much.
Oh yeah, boy.
But as for the podcast, that's all we have. Other than a quick shout out to the Discord. If you're not in the Discord, the link is in the description below, and be sure to join that. Everything in there is 100% free. The alerts are a little. I don't think they're at 100% accuracy anymore. They're at 90% something, which is still insane. Like you're not gonna get that pretty much anywhere else. What we've been practicing and what we've trained ourselves to do over time is pretty immaculate and pretty amazing. And what we're offering to everybody for free is also pretty fucking special. So I mean, if you're honestly, you're dumb as shit not to take advantage of it, if you ask me, because it's not going to be free forever. So if you join now and take advantage of it for as long as you can, there you go. I mean, you're going to be making money with us, and I mean that's that. We're completely transparent with what we do. We tell you exactly when we enter, when we exit, how many we buy, what our strategies are. We come on here, we show you guys what we think, give our reasoning for it, and obviously we're 90% to 100% right almost all or pretty much every single time. So I mean, I don't know much more convincing you need. That's pretty much all I have for you. Like and subscribe for podcast. That would be great.
A crypto to watch. A crypto to watch. I'm not gonna make a call on it. I did make a call on it before, but it's gonna be Bitcoin Cash.
Bitcoin Cash. Yeah, you told me about that earlier today.
Bitcoin Cash is due for a run. It's already ran up about $100 in the last day. I think it could get up maybe to the 1,000, maybe even 1,500 region like it did last year. So we played the 500 to 1,500 range. And
yes, sir.
It's due to do that again because Bitcoin just hit its all-time high yesterday at $66,000.
Yeah, that shit was fucking crazy.
As we said, we got out at $65,000 last time.
Yes, sir.
Yes, sir. So,
all right, everybody, that is it. That is it. Anything else to add, real quick, Will?
Nope.